Hey guys, it's Journey with Cerny here. Just wanted to give you my portfolio update for February. Not much has happened. Um, the only position that I've got a new position, and I've got that in a company I actually really do believe in. I don't like their valuation at the moment, but I decided I wanted to go with them because I want to get into more defensive investing right now because I do feel like the market is overvalued. So I got Church and Dwight. Some of the things I like about them is they are the producers of Arm& and Hammer and some other things like that. But an interesting thing about them is they also have Trojan condoms. And I thought that was a very interesting tidbit of information that I didn't know until after I bought them. But I like them, and let's see here. It is right here. So I was watching them this very day, and then the next day they had earnings, and then they dropped all the way down here, and then I bought right pretty much at that floor, I believe. Let's see. So that's at 60.46. Yeah, and my average cost is 60.50. So yeah, I only got one share, but at the moment I'm up 6% on that. I believe when I was doing some intel on this company, I saw that like the most they've ever dropped in a day within recent history was like 7%, and on this particular day, February 5th, they dropped like 7%. So I was like, you know what? This is safe. I'm going to buy it. And so I'm glad that I did. I'm going to stick with this company for a super long time. Definitely one of those buy and hold forever type companies, in my opinion. And good defensive play, and that's kind of what I'm going for anyway. And so I'm happy with them. I'm happy with a lot of my shares, honestly. I think I'm just going to kind of stick to my core portfolio for now. Raytheon. The thing I don't like about Raytheon is this is probably my favorite company I hold, but they've gone up so much in a month, and I was really thinking about adding more shares of this company and kind of like getting my average cost down. As you can see, my average cost right here is $209.51, and but they are 20% of my portfolio. And I was going to add at about this 160 range, and look, they got all the way down to 151, but they started to go up, and I just waited too long. I should have pulled the trigger, and now that it's at 181 and I'm only down 13%, I could still add and get my average cost down. But now it's to the point of like, it's not down enough for me to care. So if it does go back down to like the 160 mark, I'll buy more. But right now I'm just kind of hoping that I can get back to my average cost basis. So there's with them. Facebook, ever since they rose on earnings, I think the best they've gotten was like 170 something. Okay, 171. And then since then they've just declined a little bit. I don't think I'm going to be adding more shares to them anytime soon. As you can tell, I'm only down 5% on them. I will add back to them if we go down again a lot. Like, I expect the overall market to go down again. I feel like this is almost like a bear trap. I don't really feel like this is good. This could be a very short-term, a short-lived rally. And but yeah, I'm happy with Facebook long-term. I'm definitely going to hold them for a super long-term. If you've seen my past video, you know that I believe that they're more than just a social media company. Their potential is huge with VR, and I believe they'll get huge into the content space. And obviously with ad spend, they'll do good there. I like Facebook a lot, and they have no debt, and I definitely don't want to mess with companies with a lot of debt. And so that's kind of kept me away from companies like Kraft Heinz and General Mills and other defensive stocks that I want to get into, but the debt's so high, and like AT&T. So I like Facebook. I think they're a good value play in my opinion, along with growth. And then, as you can see, I also have 2 shares of Thor, and I am down 9% on them. They've done pretty good, I think, here recently. So I'm not, yeah, as you can see, past week it's been up 5.5%. So I'm getting better on them. I don't think I'm going to add more shares to them unless they go down a lot. As you can see on a 5-year basis, this is pretty well where they've been trading at. I mean, really, look at this. And so I don't think I'm going to add any more to this. They'll probably just let this ride out. Hopefully, this will probably have to be a really long-term hold. I doubt we're going to get anywhere near this anytime soon because with the economic data being what it is. But I will hold them gladly, and they grow their dividend pretty well. They're at a really good evaluation, so I will be holding on to them for the long term and hopefully get a really good payday from them someday. And then my last stock that I hold is YY, and then I am down on them 15%, and they are my main exposure to China. They are 15.24% of my portfolio. I really like them. They also like own part of, I think it's, I don't know how to say it. It's like BIGO. It's a Big O or something like that. And then they also have Hoya, which is big in China as far as like, it's kind of like, I would consider Hoya like the Twitch of China. You know, they're like that. And so I'm very interested in them for the, and then YY is more just like live streaming, but like chat, like, you know, when you go on Twitch and they have like the chat section, that's what YY specializes in. So I really like YY. I think they're very undervalued. I've seen a lot of articles about them that I like a lot. I'm trying to think of what the company's called. I can find it on my phone. Seeking Alpha. So I really like them and what I've read about them. So if you want to see what's on my watch list, my number one position is Visa, then Apple, and NVIDIA. NVIDIA had a really big day today with after hours because of their earnings. I have not looked into them. I have no idea. They're a company that kind of, it's weird to me because they had so much hype, and then they had the, they said that like to be, I forgot what exactly happened. I think they gave a warning for their earnings, kind of like Apple did, and the stock went really far down. I don't know if it was because of earnings or they gave a warning on earnings. I don't really remember. But as you can see here, it was at 160. Then bam, it just dropped to 131 out of nowhere. And I didn't want to grab shares because everyone was like, "Oh, this thing's going to 100," and so I didn't mess with that. But I'm not really big into that right now. Anyway, I will wait to grab NVIDIA when this market is way down. One position on here on my watch list that I want to make a core position at some point, but I think the valuation's bad right now, so I don't want to, is Realty Income. And the reason for that is they give a really good dividend, and it's a monthly dividend. And I also want to get into REITs, like real estate investment trusts. And as you can see, the 52-week high is 70.48, and right now it's almost right at that. And so if you look at the 1-year chart, it's gone up like crazy. And a 5-year chart, you know, I don't really know how to read charts. I don't know if you'd like consider this maybe a double top. I don't know if that's what that would be, and it's going to go down from here. I honestly don't know. But this looks too expensive for me, so I'm not going to mess with that right now. But when that does get cheap, I will go into that and make that a core position of mine. Something I've also looked heavily into because I want to get defensive is a healthcare stock, and United Health has superior gains in the last 5 years, and their valuation is still very good. They pay a good dividend. The only thing I'm a little bit worried about with them is, you know, politically, drug prices and everything else are made such a big deal. So with the uncertainty around them, I don't really know if I want to nibble on this stock or not. So that's just kind of an area that I've been looking at. FedEx is another stock I like a lot. As you can see on the 5-year, like, look at this. Like, what a drop. And so I feel like I don't know how much cheaper you're going to get FedEx. So I really do like FedEx. The only reason I'm not getting in board on that is because I have Thor, and so I'm like, you know, why bother? And then other things I'm doing on here, WWE is a stock I like. Not right now. I think the thing is way too expensive. It's almost at its all-time high and the 1-year high, so I am not going to mess with that. But when that does dip a lot, I should have bought here. I was so close to buying when I got to here, and I knew I should have, but I didn't. But I do like it for the future, and I'm really big into wrestling, so that's the big reason for that. And then I'm just following Vanguard, VOO, PowerShares, QQQ, Berkshire, and then Southern, and I'm just kind of looking at them to see what's going on there. I'm not really wanting to get into those positions anytime soon. I'm just kind of tracking them to see what's going on. But thank you for watching the video, and if you like it, please like the video and subscribe. Have a great day.